friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the Markets Tomorrow, the daily market technical analysis, where we look at what happened in the market during the day and how we can plan for it better trade tomorrow. If you don't subscribe, please subscribe and share it with your friends so that it benefits all. So today, the banks did the great bullish move of 3.5% and more, 1,500 points nearly up move, and then settled with 800, nearly 900 points for move. So what a day it was. So let's see what exactly happened without wasting time. So the pre-market analysis for October 26, Tuesday, that's tomorrow, where we look at all the charts, the candlestick patterns, price action, Bollinger Bands, and support resistance on divergence, momentum, trend, all of this. And in addition to that, we would have all of these, what you see in the right side includes the openness analysis, volatility, sectorial performance, institutional data, global commodities, and we'll wrap some action on this. So we look at the charts and see what the price actions today were. Look at this, right? So Nifty managed to close just 10 points after 5 bearish trades, right? And what has happened today is it has taken a bounce from the moving average support, 20 moving symbol moving average support. But Bank Nifty is the star, right? 3.5%, 1,500 points up move in single day, and then finally it settled at 865, 870 points of up move from, it's a gap up move, and it's an all-time high of 41,800. But finally it formed a spinning top candle, which sometimes can turn bearish. A spinning top on an uptrend with volumes can be dangerous, but that's what I'm on. Another all-time high, right? Another breakout, with what a move, Bank Nifty's move, 1,500 points single day up move, gap up. But the contrary thing is that Nifty is still kind of weak, just 10 points of bounce in the whole day. So intraday price action it was choppy and very volatile. 5% up move happened, then 1.5% down move happened, then 1.5% up move happened, then 1% down move happened, then again moved up. So it was highly volatile, choppy day. The Bank Nifty was 3.5% up and then 2% down, and then nothing much happened, right? So it was very volatile Nifty that we see, and very super bullish, mega bullish Bank Nifty is what we see. So Nifty has a cluster of supports down, right? It's at a gap support, it's at a changing parity, it's at a previous swing low, it is a Fibonacci extension 23%. So it has a lot of people, the major critical supports. So if that breaks 7950 breaks, then we got to go till 7500, right? And if bounce happened, this is where exactly the bounce should have happened. It happened. Whether the bounce will sustain or not depends on who we are opening and how we are closing about today's candle, right? So right now, if you see Bank Nifty is walking on the bands, okay, Nifty is struggling with the support down, it's closer to the support of the median. So this is contrary. The Bollinger Bands is providing support to Nifty, while Bollinger Bands there is a walking on the upper bands of the Bollinger that's happening on Bank Nifty, which is super bullish. So it's it's a contra move on all the chart items. If you see, this is what we're talking about. Look at the 5-6 day 6 thread candle that you're seeing, but this one is a hammer which bounced. This wick size shows that the bulls are, there is enough of buying that is happening from this support zone. Look at this right on the Bank Nifty, is a spinning top with equal size of wick and very long candle of 1,500 point candle, and it's a gap up that is happening. And that's it. Intraday price action in Nifty, you see that this is a 0.5% up move, 1.5%, then 1%, and 1%. So it's craziness happening intraday. And Nifty it's trended up 3.5% and then fall down 2%. Support resistance, if you see, Nifty 8650. So the immediate resistance would be 18350, 450 above, and after that you have 18650. Then you have the resistance of 18950. This is Fibonacci. All of Fibonacci extension levels, which were attempted till the all-time high of 18600 previously. So the swings for support will be at 7958, the 18,000, which were it touched upon and bounced. It's also a moving average. You can see here Bollinger Bands median. And if that is gone, then you have 17,850, and that's gone. If we have 17,600 to 650, and that is gone. And since that's a retracement level of Fibonacci, this 15,650, 15,600, that levels. And if that is gone, then you have 15,450, 500, 350, that kind of levels, and then that is broken. You have 17,250 and 13,300. Right side bank, if you have the record, the immediate resistance at 42,000, above that you have 43,000, both are Fibonacci extensions, and if it retraces, then support would be at 40,900, then 40,000, then 40,200, that range, and 39,500, and then 30,900, that levels. So all Fibonacci extension levels that you see, Fibonacci extensions level, the previous last major swing low, right? So support resistance of Nifty in the Bank is clear. And then momentum in divergence, if you see, momentum had on a weekly basis a bearish divergence, which momentum dipping and price is moving up, and that has confirmed, and it worked excellently, and that's how market fall down. However, it has not met complete target, would be 75,600 level. It is not gone to that. So there is a chance that the divergence can complete the target, but it's not mandatory, right? Since we've seen an up move today, a bounce may most likely may continue to bounce further up, right? But if you look at the Nifty, and the Bank Nifty, the momentum that you can see up in the Nifty, it's Bank Nifty, in the daily time frame, you can see that they are intact, bullish. Both are bullishness, nothing is happening bullishness. The trend indicator ADX is showing that there is a dip in the DMI positive, but still the bullish zone. So crossover has not happened, but the ADX trend has taken a bend, and because of that, we are seeing a big down move. It could further go, or it could again turn back. But as of now, it is continuing after the bend of the ADX trend. So strength was reduced. Momentum has also dipped, definitely after 6 days of down move on the movement system. But if you look at that, the strength of the ADX is rising up, and DMI positive is also rising up, and it is super bullish. Volatility shot up to 0.5%, and it had shot up from the 15.675 that levels to 17.5% last couple of weeks, right? So today you have 17.6 as a VIX and 0.5% up over this, and 17.3 is implied volatility, and 41% is the IBP. IBP is rising up, right? And if it is moving further up, it will be good for the option sellers to have good training to do the option selling play. Open interest value, if you see, for the expiry Thursday, monthly expiry of October. What you see here is the Nifty has got good support is 18,000, and then 17,500 also is the next highest put rating is in there. Open interest also shows that the resistance highest is at 19,000. After that, you have 18,500 also having good resistance. And 0.64 put call ratio is not at all bullish, but we had a futures non build up. Bank Nifty 40,000 and 38,000 is where the highest put rating is seen, and resistances are seen with maximum call rating at 42,000, and after that 43,000. And long build up is what we had definitely. And now usually put call ratio is bullish 1.32. Right. So sectors, what happened? Nifty has closed further down 1.5%. Correction continues, and lost the momentum sideways, and we have to wait for that to catch up. Metals went further down, lost the momentum to sideways. It attempted with a hammer pattern bounce, but we had to wait for momentum to catch up. Auto had further gone down 2% and lost the momentum to sideways. We had to wait. Pharma bounced and made 1% intraday dip. It recovered from it with a dragonfly. Big recovery has happened after the after the intraday dip that happened, but it formed a resistance candle, and the momentum is sideways. We'll have to wait. FMCG closed at 1% down, and then also, so there is a bounce that you can see in all of the sectors. FMCG, pharma, auto, metal, all are formed hammer patterns, which is indicated in the bulls. So some kind of buying has happened on the bottom side. and but momentum was lost now, right? Reality also momentum was lost, and reality went further down 3%, which is bad. Remember that it had, it is in the cupping hand formation. It broke out 35%, but it looks like the momentum is sideways in all time on weekly and daily. So like weekly it's fine, but daily short term momentum is lost. You'll have to wait for that to catch up. But long term, medium term, reality is bullish. IT also is bullish. It's just that the short term momentum is bullish. But as of now, if you look, none of the sectors are bullish. That is not good, right? None of the sectors can be mentioned as showing momentum bullishness. Trend may be good. Momentum also may not be that bad, but short term momentum, if you look at that, none of them can be tradable with the help of momentum. So institutional data, you can see that the today's data is not out. But 22nd Friday's data, if you see, there's big selling for the FI happened, although day bought reasonably. But FIs has been selling for the last 4 days continuously, which is a concern. We'll have to look at today's data, what happened. We'll just quickly go and check whether the data has come up or not. No, it hasn't. So we'll continue. Yes, though. So the dollar, before looking at the currency pair, you can see the dollar index. You can see that it is a green, it is taking its support to the previous resistance zone from where it had broken out and made a big move. So green candle means dollar is strengthening, rupee is weakening, and you can see that it has further trying to break this resistance zone after breaking off the channel, and disagree. The rupee is further weakened today, right? 75 and above. The rupee is weakened, and the crude oil is shooting up to 74.5. Can you believe it? It's going crazy. Look at gold, right? Gold is trying to break out of the channel top, right? This whether it will sustain to move above this immediate resistance of the 1830 levels is what we have to look at. And if that happens, then the long way to go upwards if that is dropping. So the call is turning out to be bullish, and we'll have to look at the coming days whether it is going to sustain this breakout. It's some kind of a breakout from the channel top is what is happening. So the Dow Jones and so the US markets are showing some green. The Dow Jones, US, S&P 500 and Nasdaq 100, and UK also, the DAX, CAC, UK 100, all are showing some green ticks today, but it's too early to make some sense on it. So we'll have to check the next day pre-market whether how the global markets and the US market is performing. I probably take a call, but as of now there is some green that's seen as compared to previous days. Gold is bullish, crude is crazy high, and the rupee is weakening, not at all good for the economy as such. Actionables, Kodak banks are bullish, and Kodak Bank, you can see that this is broken out of the resistance with a big huge candle, and then this is a swing trade, not an intraday, so you can enter the retracement at some point in time while drawing a Fibonacci retracement level, and then make the entry, and then it could sustain further. But look at the right side, the ICICI Bank, same. This may not be the time to enter, but definitely there is a gap support that is going to be here, so it can retrace a little bit after a few days or one day, we'll never know. So immediate to that, you can just go and examine results fundamentally also, and look at the volume. The huge 10% move is what you see here. Right? Earlier it went to 14% of intraday move, and suddenly 10% of a move in single day gap up. So this can be a buy at retracement levels in swing trades, right? So two actionables ICICI, both are from Bank and Kodak, right? So just to wrap up, mild bullishness is a short-term view. The reasons are Nifty has a hammer bounce with a good support level, and Bank Nifty is very supportive and very bullish. And 3% of correction has already happened in Nifty, reasonable. And quarterly earnings could further cheer. There are some more results that may come in, and then we could further cheer the market and get up more. Still possible. Institutions are selling. It's the reason why I'm mild, not really bullish. Institution selling is heavy. Profit booking can come at this 18,000 above kind of levels. Market still has room for more correction. If you look at corrections of 5 to 10%, that has not happened. It's only just 3% of correction. So these are the reasons why I'm only mildly bullish and really bullish. Now the last two paragraphs are repetitions, like one is on a not on the volatility. Volatility is forming a range between 15 and 19. Right now it was 17 above levels. It may attempt to go near to 19 again, or it could take some more dip to the 15 or 16 levels, and then again. So this hovering, as long as it keeps on happening, it's good for option sellers. Anything beyond 20 has to be looked at with caution, but until then, this is going to give good premiums and good IB percentiles, and option sellers can make money, right? But intraday volatility is huge, like what you see today, right? Nifty made 1%, 1.5% up move, 1.5% down move, then again 1% move. So that kind of choppiness is very difficult to trade unless you know the candlesticks and the signals of the reversal and understood properly, right? So always at this profit booking level and choppiness high days, it is better to trade vertical spreads like bull call, bear call, and bull put, bear put, all these kind of strategies, instead of making naked calls, because the directions could drastically go on intraday. Calendar spreads also can benefit from the Vega spikes. Right? And fly strategy is also good. So these are the option strategies that can be applied, and the volatile based on the volatility levels that the market is going to ride. So I hope this gives you a view on what happened in the market today, and also helps you to make your own trading plan for this. Makes you a little better, right? So if you like that, hit the like button, subscribe, and share it to your friends so everyone can benefit. Thank you so much. Thanks for watching. Have great trading. Have great trading. Bye.